look what we have here. I have the Self Visa. I also have done 1 year with Self, and I want to talk to you about whether you should take it or not. I'm going to give you all of the takeaways, the good, the bad, and the ugly. But I'm going to walk to the bank and we're going to go cash this check. And then when I get back, I'll break down every single thing that you need to know to make a decision on whether you want to go with Self or not. Come on, let's go. Let's go to the bank. Let's go cash this check. Okay guys, so we're fixing to head to the bank and take care of this business. So as far as my experience with Self, it's been a pretty good experience. That's what I'll say so far. So we're headed to the bank right now for those of you who just hopped on the video or what have you. And fortunately for me, my bank is just right next door to my place. But we're gonna walk over here. All right guys, so I just left the bank. I just cashed the check. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 10, 11, 12, 13, 14. Okay, so before we jump into the nuts and bolts of Self, many people ask, what is the difference between Self and a regular traditional loan? And so I want to address that before we dive into Self itself. Okay, so let's take a look. So you have your traditional loan here, okay? And then we have Self, okay? All right, so let me break down the difference between both of these. So with the traditional loan, what you're going to notice is that number one, and there's just one main key difference, and that's the only thing I'm going to point out because I want to jump into should you get it or should you not get it? Is it right for you? Right? That's the purpose of this video. All right, so with the traditional loan, you go to the bank and you say, hey, Mr. Banker, I want to borrow $1,000, right? So you go in the bank, you walk in, you fill out an application, you say, I want to borrow $1,000. When you go to your banker, let's say you get approved for that loan, okay? And for easy figuring, let's say that you want the loan for 12 months, right? And let's say your payment is $100, okay? Just for easy figuring. So the main difference is when you go to this bank, you're gonna walk out with $1,000. Now, let me show you how Self works. Self, you go to Self, you say, hey, you know what? I'm gonna do $1,000, right? And this is just for figuring. We're gonna dive into it, but I wanna just show you the key difference. With Self, what they do is you say 12 months, the same, everything is the same. Let's just use this for easy figuring, right? Okay, but when you do Self, you're not gonna walk out with $1,000. They're gonna take this $1,000, right? And what they're gonna do is they're gonna put this $1,000 into a CD or a certificate of deposit, right? And so what happens is that they put this money basically to the side, and it's a 12-month period, right? And then after you pay the $100 for 12 months, then they release this money to you. And so the main difference between a Self loan and a regular loan is that you don't get the money up front. They take the money, they put it in a CD, you make the payments, and after you finish making the payments, then the money is released to you. Okay guys, so I had to interrupt this video to tell you about our $50,000 giveaway. So basically what we're doing is we're giving away $50,000, our $50,000 VIP business credit package, where we're gonna work with one lucky individual. Hopefully it's you, but we're gonna work with one lucky individual one-on-one, and we're gonna coach you on how to build $50,000, and we're going to work with you. This is not just a coaching where we throw you away and give you some videos. No, we're going to work with you one-on-one to help one lucky individual build $50,000 in business credit. But it don't stop there. It gets better. What we're also going to do is give you access to our business credit and finance software. Now, this software is unlike everything else in the market because our software have access to over 4,000 net 30 vendors. Now, you're also going to get access to 13 banks. You're going to get access to 267 alternative online lenders that lend to businesses every single day. And you're also going to get access to 5 SBA programs and 9 real estate programs, commercial real estate, as well as fix and flip real estate. So if you're in the real estate market, it will work for you as well. Now, why are we doing this? I decided, hey team, we need to give something away in order to get some momentum, to get some traction going, and to reward the first few people that subscribe to our channel. So in order to win, all you have to do is subscribe and then comment below, where are you chiming in from in the world? You can also just leave a positive comment telling us, hey, what did you take away from the video that was really good? Outside of that, I hope you enjoy the rest of this video. My name is Richard Dang with Credit, Hustle, and Finance. Welcome to the new channel. Look below because we got some more resources in the description box. Other than that, I hope you make it a great day. Enjoy the rest of the video. Okay, so now that we got that out of the way, I'm going to go over the 14 most important things that you need to know prior to applying. Because if you are considering using Self and using the Self platform, you need to be informed on what you need to know, some of the pitfalls that you may want to avoid, and also you want to know the benefits, right? You want to know, hey, why is this a good product? Why are people advocating this product? So I'm going to go over 14 different tips and just things that you need to know before applying. But then after that, we're going to jump on the website and I'm going to just walk you through it. So if you decide to move forward, you won't get lost on the website, right? How cool is that? And then I'm even got something even more powerful and even better. And that is at the end of the video, if you stick around, I'm also going to be showing you why Self is a powerful product, because there is a method to their madness there. Okay, so number one, what is my monthly income? How much money do I need? Is there some type of requirement set in stone that, hey, you have to be making X amount of dollars in order to be considered? The beautiful answer is no. That is so huge, because as well as I know, the very first thing when you go to a bank or when you go to a financial institution, or whether you even go to an online lender, the very first thing they're going to ask you for is, how much is your annual income? Or what is your gross monthly income? Or how much do you make a week? And a lot of times that just disqualifies people out of the game. So that's a beautiful thing. Number two, will they report to all 3 credit bureaus? The answer is yes. They report to Equifax, TransUnion, and Experian. Now, why is that huge? That's huge because many products out there, some of the different credit card products or what have you, some of them, they may only report to 1 credit bureau, or they may only report to 2 credit bureaus. Well, the beautiful thing about this is you can rest assured knowing that every time you make an on-time payment, every one of the major credit bureaus are adding to your positive credit history and boosting your score that much more. So that's a beautiful thing. Okay, number 3. Now, this is a question. Well, this is not a question, but this is a requirement. Okay, you have to have a valid Social Security number, and that's just something that you have to have. You can't, there's no way around it. Number 4, will Self do a hard inquiry on my credit report? The answer is no. So that is huge, ladies and gentlemen. The fact that they are not putting a hard inquiry or hard hit on your credit report is very, very huge. Let me tell you why. Number 1, because when if they were using your credit and you had no credit or bad credit, then that would present a problem, wouldn't it? Because once they pull it and they were basing it off of your credit score, then that might be an issue. But not only that, the fact that the hard credit inquiry hits your credit report in the future, what's going to happen is that when you start, because you're going to be applying, you're going to be rebuilding, you're going to be applying for credit. Well, every time you apply for credit, when a financial institution make a hard inquiry on your credit, it's going to drop your credit score between 5 to 10 points. That's number one. Number two, you know how right now they have, when you're filling out applications online, and you know when you're looking at the screen or what have you, and you put your information in and you click the button or whatever, you know how some of these right now is going to a pre-approval status. You don't even need a human to be involved now. The computer itself will pull in data and say whether or not you're pre-approved. Well, they have thresholds. So for example, I'm gonna show you this. And this is why inquiries are really important, and it's a beautiful thing that Self is not doing this, is because, for example, when a lender is setting up their software, and I know this, many of you may not know, but I am an underwriter and a technology investor that invests in fintech. So that's one of the reasons why I know this. So when we go into the software, we can actually set, if a person have over 5 inquiries, it's an automatic decline. Now, you may actually be a credit-worthy customer, but because of that one threshold that you crossed over, you're going to get an automatic decline on our website, within the software. And when we set it up for other companies, it's the same way. They pick their thresholds and we just plug it in. And so that's a beautiful thing, that Self is not going to put a hard inquiry on your credit report, because you're building and you don't need that on your credit report. Number 5, will you be able to receive the money today? Now, this is a question that I get a lot. And the answer is, and we kind of went over that earlier in the video, but the answer is no. You don't receive the money today. That's not, this is not a traditional loan product. Okay, this is a product where you receive the money at the end of the term. Okay, all right. So number 6, should my credit score go up, or how many points will it go up? That's the $1 million question in the room. Like, how many points will it go up? Well, what we're seeing is between 30 and about 140, 150 points. So that's what you could expect your credit score to boost your score. Now, if you have no credit score, this is so huge. If you have no credit, let's say you're a person, you don't have any credit, you're 18 years old, or you just never applied for credit or whatever, what have you, you have nothing on your credit report. If you take out a Self account, within about 4 to 5 months, you can expect your credit score to hit 680 to about 720, 730 range. And that is what we're seeing with our students, between a 30 to 150 point increase. Okay, can I pay it off early? Now, I've seen, people saying, well, let me answer the question. Can you pay it off early? Yes. Should you pay it off early? In my opinion, I don't believe you should, because the whole point in taking out the actual loan is to build credit history. So why would, let's say you take out the 12 month, but then you pay it off in 4 months? Because I've read blogs, I've seen YouTubers that say that, maybe you should pay it off early. That's defeating the purpose. What is the number one thing that builds credit? What accounts for 35% of your credit score, your FICO score? It's payment history. So why would you take out the loan and pay it off early? It just doesn't make any sense. The only time that you should consider paying off early is if you're in a situation where you let's say you're working and you get laid off, and let's say you're in a situation where you're scared you're going to miss a payment, because if you miss a payment, that's going to show up as well. So you want to make sure you're making your payments on time. But let's say you get in a situation where, let's say you're halfway through, you're in your 6 month or whatever, and you see, let's say you took out $150 a month, and you see where there's like you're not going to be able to keep up with it. Then I would say, hey, and that's not even paying it off early. That's basically just saying, hey, I'm gonna take what I have or what have you, and then I'm just gonna cancel the account like that. But outside of that, I don't think that you should ever pay it off early. Okay, let's go. Number 8. The cool thing about Self is it's available in all 50 states. Number 9, you must be 18 years or older. Now, if you're below 18, there's other ways to build your credit, and I'll be putting videos on about how to build credit under 18. But as of right now, you have to be 18 years old, and you have to be within the U.S. Okay. And number 10, a U.S. citizen. You have to be a U.S. citizen. Okay. That's self-explanatory, so I won't go into more with that. Okay, let's see. Number 11, do you need a bank account? And that's a common question, like, I don't have a bank account, what can I do? Well, if you don't have a bank account, the beautiful thing about it is that you could use a debit card or you could use a prepaid card. So if you don't have a bank account, don't get discouraged. All you have to do is use a prepaid card or a debit card. So you'll be in good shape if you do that. Number 12. Now, this is kind of like a benefit, and this is something I want to talk about. I'm gonna read it out, and then I'm gonna just elaborate on it real briefly, and then we'll finish up so that we can dive into the platform. Okay, so number 12, you get to save money while building credit. That benefit alone is beautiful, because many times when and I know this for myself, I know this for my students, and it's just human nature. We spend more when we feel like we have more. So when you're making that payment, not only are you building credit history, not only are you putting yourself in a position to where in the future you'll be able to get a self credit card like the one that I showed you earlier, but then also number 3 is you are actually saving money. So it's not like when you're making that payment, it's like you're making the payment essentially. What you're doing is you're turning around and making that payment directly to yourself. Even though you're giving it to self lender, they're taking a little portion out in interest, but then the bulk of that money is just coming right back to you at the end of the 12 months. So that is the most powerful benefit I try to drive home to some of the people that's on the fence about Self. It's not you're making a payment to the loan, but it's like you're just shifting money from one place to the next place to get it at the end, and that's it. So that's a beautiful thing. Number 13, they have the option for you to get a Visa credit card. Now, why is this powerful? Because what happens is when it comes to building credit, if you know anything about credit at all, revolving accounts, credit card accounts, that is one of the quickest way to build your credit score. Now, an installment account, we've talked about this. That's a fixed amount of money that you get up front, and you make a fixed payment every single month. A revolving account is like a credit card or a line of credit. So the difference between the two is that the revolving account, the payment can fluctuate depending on how much you take out of that. So if you have $1,000 credit limit and you pull out $25, your payment is going to be less. But let's say you have $1,000 credit card limit and you take out 500, then your payment is going to be higher. So your payment fluctuate with revolving accounts, but for some reason, I guess it's the American way, I guess they want to keep us in debt or whatever, but some reason the FICO score, it just love revolving accounts. And for people who have bad credit or people who have no credit at all, typically you're not going to just be able to go and get a credit card, because no one is going to trust you with their money, because you haven't built that trust up if you have no credit. And if you have bad credit, it's like you've breached that trust. So it's like who's going to trust you? Well, with this, by you taking the self account, once you get over $100, you can literally take out a secured credit card, and the secured credit card based on the amount that you have in your self savings. So that is huge because you're getting an installment account as well as a credit card, which is a revolving account. That's two different types of credit. 10% of your credit is credit mix. I'm not going to go into details on it. Just trust and believe that it's a beautiful thing because you'll be able to get a credit card. And that means that you will be able to, because some hotels won't, how can you get a hotel room? How can you, I mean, you can do debit card with hotels, but car rentals, you know, they want credit cards, you know, it's certain financial institutions and certain things that you can do, that you're going to want to do in life to improve your quality of life or just make life easier for you. You're going to need a credit card because some places, that's the only form of payment that they take, or they penalize you if you use any other form of payment. So that's huge. And number 14 is there are no hidden fees, and I'm gonna show you that as we dive into the platform. So let's go ahead, let's jump into the platform, and after we do that, what I'll do is I'll go ahead and give you the bonus on why I think Self is such a powerful tool that you need in your financial arsenal. Okay, so now we're on the Self site, and I just want to show you a couple of things, and we're going to wrap up this video. Okay, so number one is just say apply for the credit builder account. Number two, pay off the credit builder account in a specific amount of time. Number three, each time you make a monthly payment, you build credit history, it adds to your savings. And number four, you just unlock your savings. Pretty straightforward, okay? But what I like about it is they have 4 different programs that you can choose from $25 on up to $150. Now, let me show you something else and then we'll wrap the video up. Okay, so remember I said they have no hidden fees. When I say no hidden fees, I mean literally no hidden fees. Okay, so if you were to just do the $25 a month, you'll pay $9 today. Then the very next month at the same date, you'll pay $25 a month, and you'll continue that for 24 months. And after 24 months, you'll have $520 plus you would have established credit history. That is huge. But let me show you what I did. Oh yeah, then they also break down the fees right here. So $89 for 24 months, man, that's peanuts. Now I did $150. I'll just show you that real quick. I paid $9 up front. I did the $150 for 12 months. After 12 months, I got $1660. Now, if you notice, my check was $1,314, and that's because $350 of those dollars were back in that credit card, the Self credit card that you saw. All right, and then $146 in fees for these people to help me to get establish a revolving account and also a installment account. Now, of course, I did this. I have other credit cards, but I did this as an experiment so that I can actually show my students and people behind the scenes prior to me starting this YouTube channel that this actually worked, and I'm a product of the product. Now, if you like this video, I want you to tell me, what is your greatest takeaway? Like, what did you learn, or what light bulb went off for you, or tell me the state that you're chiming in from. And also like, love, and if you can share the video and subscribe, I would greatly appreciate it. God bless you and make it a great day. Let's jump into the bonus material. Experience. In conclusions, I think that if you decide to go with it, you won't be disappointed. There's a link below, and you can check it out. You can check out how to apply, as well as get some tips. But just follow the link below and share this video. Like, love, comment. God bless you. Make it a great day.